All right, bull runners, welcome back to the channel. So with the crypto market bouncing over the past 24 hours, Donald Trump's son is bold posting saying a new era for Bitcoin in America starts now. American Bitcoin debuts on the NASDAQ today. And now we're seeing a reversal in the altcoin market. And if you guys watched my video yesterday, I talked about bullish divergences and how they play out in virtually every single price chart, stocks, cryptos, precious metals, you name it. When you learn to spot these, it will completely change the game for you. So before we get into these projects, I need to talk about this first and give you a macro market outlook of what's to come next for everything outside the top 10, specifically these projects that are in today's video that we're going to discuss on the price chart. Because when you look at a bullish divergence and the price chart makes a lower low, but yet you see a key oscillator or indicator making a higher low, that's a sign that a reversal is coming. And explain how to look for divergences on the chart. So we saw this breakdown take place from this key zone of support. We came all the way down to about $1.51 trillion. And if you look at this low right here on the 30th of August and this low right here on the 1st of September, and you just connect them together, it's a lower low on the price chart. Now, if you look at the same thing on the relative strength index, on the hourly chart, even going all the way back to the 29th of August, we were just continuously putting in lower lows. But if you look at the relative strength index all the way down here, you can see the RSI bottomed out here at 28. And on this low on the 1st of September on the price chart, the relative strength index was at 32, forming a higher low. So if you look right here, this is a regular bullish divergence, and this is a major reversal signal. The momentum to the downside is slowing and we'll inevitably see a reversal to the upside. Now, the key to understand with divergences is you never know when that reversal will take place, because price could have easily done something like this and coiled up in this falling wedge a little bit longer. The key to look for here is a break of structure and a trend change. And what that would be is clearing of previous range highs. So for example, you can see ever since the 24th of August on this major rally up here, we've been putting in lower highs. The 28th of August was a lower high. These were simply lower highs. We've been in a downtrend for over a week until just recently with this major move in the market, clearing the highs of the 30th and the 31st of August. Now, this is the first major sign of a trend reversal, where a trend change is a new series of higher highs and higher lows. So the lowest low right here is on the 1st of September at about $1.51 trillion. Now, we could pull back as long as we stay above that low, and the next low is a higher low. Even if we pull all the way back down here to about $1.55 trillion, and we bounce from this range right here, this would be a major trend reversal, and we would now be starting a new uptrend for total 2. The main thing that I want to see is us to hold on top of $1.58 trillion to even push even higher to clear this next high up here at about $1.62 trillion for total 2. So this is pretty much like a defibrillator to the altcoin market to shock these altcoins back into revival, because they've been going through a heart attack over the past week or two. So this is how we tend to see these reversals take place. Is on the right hand side of the screen, you can see total 2 going all the way back to the 21st of July. And so we see in a downtrend simply a series of lower highs and lower lows until we inevitably reach a bottom, and then we see an initial rally off of the low to clear a previous high to start a trend reversal. So right here by about the 4th of August, we saw this major rally off of this low of $1.33 trillion. And then we even rallied all the way up to about $1.44 trillion. Now on this first initial revival pattern off of the low, we tend to see a sell-off before we inevitably continue higher. And so depending on how high total 2 goes in the short term, we might see a short-term consolidation before pushing a little bit higher, and then a much deeper consolidation, similar to what we saw during this phase right here on the recovery after the 4th of August to the 7th of August for a few days. So depending on what this looks like, this is what we then want to see, is a higher low being put in than the previous low to start a new uptrend. So for total 2, this would be the next step in the revival of the bull market for us to then go back to retest the previous high from the 22nd of August, even the 14th of August, similar to what happened back here for total 2 by the 8th of August. So $1.51 trillion all the way down here is a very key level of support to hold to maintain an uptrend for total 2. Now, this is important to understand because this is typically how the path to alt season goes. And you guys have seen this many times, but this is a nuanced point, and the reason why you want to watch throughout the rest of this video to truly understand what's about to happen next. Because phase 1 is always Bitcoin, right? Money flows into Bitcoin, causing price surges. We've seen Bitcoin dominate this whole entire market cycle up until the 27th of June, when we saw Bitcoin's dominance top out all the way up here at about 65, 66% and experience this sharp pullback. So now money has been rotating out of Bitcoin into altcoins like Ethereum, and we've seen Ethereum rally from $1,400 to over $4,000, nearly $5,000 now, just sitting on top of the previous high from the 11th of March, the 28th of May, the 8th to 17th of December. So we've officially transitioned from phase 1 to phase 2 of alt season, where Ethereum has been outperforming Bitcoin. We hear talks of the flippening phase. So the number one thing that smart investors are now preparing for is phase 3 to phase 4, where Ethereum has been outperforming Bitcoin and large caps are going parabolic, but we haven't seen large caps go parabolic and past their previous highs, other than some newer projects where this is their first bull run, whereas other projects that experienced the largest growth last bull run are lagging behind. For example, if we look at something like Uniswap sitting at $9.70, whereas the previous high from 2021 is up here at $44. Or even PancakeSwap sitting down here at $2.40, whereas the previous high was all the way up here at $42. And one could argue this is because newer projects are absorbing a lot of the liquidity, but even looking at something like Sui hasn't been going parabolic and isn't up at its previous high of January of $5.30. Sui's sitting at $3.30. So Sui, one of the most hyped up and promising layer ones, is still lagging behind its previous high. So we're not in full-blown phase 3 yet. We're still in phase 2 of Ethereum outperforming everything else. But we've seen this phase overlap happen where money has started to trickle into large caps, where we see buy-ups happening, but the large caps are not going parabolic. So the biggest mistake that I see new investors make when they see this happen is they jump right into the low market cap projects and they start buying up projects that are virtually dead right now, that are small caps anywhere from $1 million to $100 million market cap, when we're not at that phase in the market cycle yet, and they're left waiting for the next 1 to 3 months, hoping that that rotation will take place, when where they should be focusing right now is the transition from phase 2 to phase 3 before they go full degen mode just yet. And the case in point is what's happened on Solana's blockchain. We saw this whole entire craze right here for a lot of new projects launching on Base, on Solana, where these major buy-ups were happening for all of these projects on the last major run-up in Q4 of 2024, and then we've seen these projects bleed out to next to nothing. So leaving a lot of people to wonder if meme coins are dead, and if all altcoins in general are going to make a recovery. So if we look up crypto on Google Trends, we can see that we've pulled back from July from 48 out of 100 to now we're at about 17 out of 100 in terms of public interest and retail interest. And if we look up something like meme coins and we remove crypto so we can see the interest in meme coins, it's at 13 out of 100. We've pulled back drastically from July, and even back here in January when we were 100 out of 100, when everything was going parabolic based on Solana's blockchain. So this is a key to understand here, because just as much as the charts go through the psychology of a market cycle, so does retail interest on Google Trends. And so what we're going through right now is the depression stage for meme coins, where people think that they're dead. Now, I think this is extremely important to talk about Ethereum and what's about to happen next based on what I see on the charts. Now, I could be wrong here, but I'm going to bring up data and I want to compare these two charts together to show you what happened last bull run cycle and why this is playing out similarly to the past. Now, there are some key differences here, so let me explain. Because if we go back to the previous high at the bottom of the screen, you can see when Ethereum topped out at $1,400 here. That was the bull market peak. Then we saw this A sell off, this B dead cat bounce, and then this C to the bottom for the bear market low of about $80 for Ethereum. Now, that's when everyone was out of the market. I mean, look at this. This was December of 2018. We can even go back to Google Trends. We can type in Ethereum here, sort based on 2004 to present. And look at this. On December of 2018, Ethereum was 4 out of 100. Nobody cared about Ethereum at that point. So we were in full-blown bear market. And it wasn't until after October of 2020, Ethereum was still at a 4, then it erupted to the upside and retail started diving back into the market. And by May of 2021, Ethereum was 100 out of 100. So, and if you look right now, Ethereum is only 20 out of 100. So sure, it's up, but it's nowhere near where it was back in May of 2021, which is a major sign that Ethereum's rally is not yet done, because we're just sitting right here at the previous high of 2021 at the tail end of November, and we're at these exact same levels right now in price, but yet interest is cut in half. By November 2021, Ethereum was 44 out of 100, and right now we're at 20, but yet we're pretty much at the exact same price. So this shows that retail doesn't really care right now until Ethereum goes back into price discovery and sets a brand new all-time high. Because when you do it once, you shock the world, you get everyone excited. Case in point, we were 100 out of 100 here in May of 2021 for Ethereum, going full vertical on Google Trends. And what we were doing on the price chart, we were doing the exact same thing. We were going full vertical on the price chart for Ethereum. So now that Ethereum has rallied back up to these levels and it's doing it a third time, people are like, big whoop, cool, we've seen it before. Do something unique, do something new, and go into price discovery again to send Google interest from 20 out of 100 back up above at least 50. So one could argue based on this data alone that we're still in phase 2 because Ethereum is not in price discovery right now. And positioning yourself before phase 3 happens is how you set yourself up for the next major move. Look at this chart right here on the bottom of the screen. When Ethereum pulled an ABC correction at the bottom, now look at the top of the screen at the others chart. This is everything outside of the top 10 on CoinMarketCap. And you can see the same sell-off, right? We had an A, we had a B, and then we have a C. But yet the C wave took even longer to come in for everything outside the top 10 to August of 2019. Whereas when Ethereum bottomed here, that was a higher low at about 6% of the dominance of the industry for others. And on this 2019 rally, it was a lower high, similar to Ethereum. But then we put in a lower low, whereas Ethereum stayed above $80 even during the COVID crash before we made that recovery from 2020 to 2021. Now here's the major key that I want you to understand here is from September of 2020 until January of 2021, Ethereum made a recovery from $300 back to the previous high of about $1,300 to $1,400. During that phase, we saw liquidity flow out of everything outside the top 10 and into the large cap projects, and others went from 11% market cap dominance during that phase all the way down here to about 5%. So liquidity was rotating into Ethereum at that phase. So if you were holding small cap altcoins expecting phase 4 to happen before phase 2, then you would have made a major mistake like I just mentioned.